Hello everyone, and welcome back to Explain the Charts. Today, on October 1st, 2025, we're diving deep into one of the most talked about stocks in the market, Amazon, ticker symbol Amazon. The sentiment around Amazon is incredibly mixed right now, creating a confusing picture for investors. On one hand, we have bullish analysts upgrading the stock, pointing to a massive AI-driven future for Amazon Web Services. On the other hand, the data shows Amazon has been the worst-performing Magnificent Seven stock this year, and there are serious concerns about competition in the cloud space. We're going to cut through the noise by examining the latest news and then digging into the charts to see what the price action is really telling us. First, let's cover the news shaping the narrative. The bull case is getting a lot of attention, primarily driven by Wells Fargo upgrading the stock to overweight with a $280 price target. The key catalyst they cite is Amazon's $4 billion investment in AI developer Anthropic. The theory is that Anthropic's need for massive computing power will directly fuel AWS revenue, helping it accelerate and fight back against rivals like Microsoft and Google. We've also seen positive headlines about Amazon launching a new private label grocery line to compete with Costco and Walmart, and an AI-enhanced partnership with the NBA. However, the bearish arguments are just as compelling. Headlines have repeatedly labeled Amazon as big tech's biggest loser in 2025, with the stock advancing less than 1% year-to-date while its peers have soared. This underperformance stems from investor frustration over a perceived lack of a clear AI roadmap and AWS growth merely meeting, not beating, expectations. In its Q2 report, AWS growth was reported at 17.5%, while Microsoft's cloud grew 39% and Google's grew 32%. Adding to the uncertainty, CEO Andy Jassy has warned that supply constraints for power and chips could take several quarters to resolve. Beyond company specifics, we have major macroeconomic headwinds, including a U.S. government shutdown and a surprise drop in private jobs, which could dampen consumer spending. There's also the recent billion-dollar FTC settlement over Prime subscription practices, a regulatory headache the company is now dealing with. Now, let's pull up the daily chart to see how this dramatic story has unfolded in the price. Looking at the big picture for 2025, we can see the stock had a powerful run-up, peaking at an all-time high of $242.52 in early February. This peak was followed by a sharp downturn and a prolonged period of selling and consolidation. The price has been making a series of lower highs and lower lows for several months, which is a classic definition of a downtrend. One of the most dramatic periods occurred in early April. News reports from that time mentioned tariff news and a precipitous market decline, which some funds used as a buying opportunity. Let's zoom in on that specific period. Here on the daily chart from April 2nd to April 7th, you can see the brutal impact of that news. The stock gapped down hard, falling from around $196 all the way to its 52-week low of $161.38 in just a few trading sessions. This was a clear panic selling event, where broad market fears dragged Amazon down significantly. Following this low, the stock did manage to stage a recovery, clawing its way back over the subsequent months. Returning to the full view, we see another major event, the massive gap down at the beginning of August. This drop from around $234 to below $215 lines up perfectly with the Q2 earnings report in late July. This is where the market reacted negatively to AWS growth only meeting expectations and the cautious guidance from the CEO. The price has not been able to recover to those pre-earnings highs since. Instead, it has been consolidating in a wide range, generally between $215 and $235. More recently, in September, the price action has been particularly weak. Starting the month above $238, the stock bled all the way down to its current levels around $220. This slide corresponds with the renewed wave of negative press, including the reports about being big tech's biggest loser and facing regulatory challenges on September 23rd. We've now established a significant resistance level near the $230 to $235 area. On the downside, a clear support zone has formed between $216 and $220. Let's switch to the 1-hour chart to get a closer look at this recent action. Here we can see the breakdown in late September much more clearly. The price decisively broke below the $230 support level around September 10th and has struggled since. It attempted to rally, but was rejected harshly at $228 on September 12th. The sell-off accelerated on September 23rd. The day news broke about its legal challenges, sending the stock tumbling from $227 down to nearly $220. In the final days of September, the stock has been chopping around this $220 level. Yesterday's session on September 30th saw the price fall from an open of $222 down to a close of $219.57. This shows that sellers are currently in control on this time frame. For an even more granular view, let's look at the 15-minute chart for the last day of trading, September 30th. The day started with a gap down and an immediate push lower in the first hour of trading. We can see a battle took place right around the $219 level for most of the day. Bulls tried to push it back up, but every attempt was met with selling pressure, creating these small upper wicks on the candles. The day ended near the lows, which is a bearish sign heading into the next session. The price action today, October 1st, although not on our chart data, has reportedly been volatile, with the stock opening lower near $217, but fighting its way back above $220. This suggests the battle between the bullish AI narrative and the bearish performance concerns is happening in real time. So, how do we put all of this together? The long-term bullish case for Amazon is entirely dependent on the AI narrative coming to fruition. If the Anthropic partnership truly reaccelerates AWS growth back towards 20% or higher, as the Wells Fargo analyst predicts, the stock could break out of this downtrend. This would likely cause a major reversal and could see the stock retest its all-time highs above $240. However, the short to medium-term picture looks more precarious. The chart is in a clear downtrend from the February highs, and the price is currently sitting on a precarious support level. The bearish case is that AWS continues to lose ground, macro fears from the shutdown intensify, and the stock remains dead money. If this happens, a break of the current support could lead to a swift move lower. Let's recap the key price levels to watch. Immediate resistance is at $222, which was yesterday's high. Above that, the next major hurdle is the $230 to $232 zone, which was a previous support that has now likely flipped to resistance. The ultimate resistance remains the all-time high of $242.52. For support, the most critical level right now is the $216 to $218 zone. A break and close below $216 on the daily chart would be very bearish and open the door to a much larger drop. Below that, the next significant support area is the post-earnings gap floor around $211, and then the psychological $200 level. The April low of $161.38 represents the ultimate floor for the bulls. Now for some unbiased predictions. I believe there is a 60% probability that we see continued choppy, range-bound action between $216 and $230 in the immediate short term. The market is in a wait-and-see mode regarding both the macro environment and Amazon's next earnings report. A bullish breakout above $232 becomes more likely if we get positive news regarding the government shutdown or unexpectedly strong tech sector performance. A bearish breakdown below $216 becomes more likely if the shutdown drags on, negatively impacting consumer sentiment, or if a competitor like Microsoft posts another blowout cloud earnings number before Amazon does. Long term, the key thing to look for is the next earnings report. Specifically, watch the AWS growth rate. If it accelerates towards 20%, the bull case is validated. If it stagnates or declines, the bear case will likely take over, and the stock could see a significant repricing to the downside. That's our in-depth look at Amazon. It's a classic battle between a compelling future story and a challenging present reality. Let me know your thoughts in the comments below. Are you bullish or bearish on Amazon? If you found this analysis helpful, please hit the like button and don't forget to subscribe to Explain the Charts for more deep dives into the market. Thanks for watching and trade safe.